Hello everyone, thank you for joining me again for Terminology Tuesday. Last week we talked about the steps involved in the approval process. We started with episode 1 being the initial meeting. Now we're going on into step 2, and usually at step 2 you're now gone out hunting for a property, found the one you like, you've put in an offer and ready to go forward with the mortgage approval. So you've worked with a realtor. The realtor has helped you set up that offer to purchase. I strongly recommend using a realtor. There's lots of different ways that realtors assist you in saving money. And that can be with needing property inspections, property appraisals, whether that's going to be required. That's usually a lender requirement in some cases, but the realtor is going to explain some of those things. Plus taking you through the property, just see if the property not only looks nice, but it also has got some other, structural issues or anything else that could be going on with the property. Now you've put the offer in, and that is what I need to see next. So now you've brought the offer in, we've looked at the listing. The listing gives the specifics of the property. Once we've looked at all of that, we've got the actual price now of what it is that you're going to buy. Before, when we were doing the pre-approval, we were basing it on a guess, an estimation of where you wanted to be based on the payment that you had. Also on sort of the house that made sense for you, for your family, for your situation. Now we've got the actual to the dollar amount of that offer. That is where we now go to the lender. We couldn't go to the lender before because we didn't have the property. We now have the property. So we put the two together. We put together the information we got for you regarding income, regarding credit, and now we're putting the property with it. And we'll go through all of that. We'll go through that and decide on the lender. Which lender? Sometimes it can be your bank, sometimes not. Sometimes it's the interest rate that's more important to you. Sometimes it's walking into a bank that's more important. We have it all. We have the ones that are the trust companies. We have the major banks, so we can make that fit and help you make that fit. And determining, what's the term you want, what kind of payment is that going to mean, and again, putting it all together. It can also mean updating some of the information that you gave us before, because maybe there's a bit of time that has happened between when you came in and got your initial meeting with us. We did a pre-approval, and now maybe it's less than a month, maybe it's 45 days. If that's the case, then we typically don't need more income information. If it's been longer than that, we need more income information. Now we're asking for an employment letter, and that employment letter is going to state things like how long have you been at your job, what kind of a position do you hold at your job, do you have a guaranteed income, do you get overtime. We're going to go through all of that and other documentation to back that up. Lenders are much more specific and needing more information than ever before. So just remember, it's not just about coming in, giving me a pay stub, and we're good to go. Job letters, pay stubs, usually notice of assessments from Revenue Canada, sometimes T4s. It can get, sometimes it's really simple because you have a basic base income job, and it can be maybe less paper that's needed. Sometimes it's not. And we will go through that with you. Just bear in mind, we're only asking for what the lender asks us for as well. And we're going to go through all of that in that meeting, because now it's time to send it off to the lender to get the approval from them. Okay, now next week we're going to discuss the next step. And you're talking with Brenda McKay at Advanced Mortgage, and there's also Jessica Bartholf, and we're here to assist you. 403-347-0774. Thank you so much for joining me, and have a great day.